The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show in nighttime Asia here. It's Wednesday morning there in the States. Hope you guys are having a good morning. We're going to get right into crude oil here really quick, and we got our video back. This is one of our offices here around town. Going into our weekly on crude oil, this is the May contract. We're going to take a look at this because we're starting to creep slightly above this 53.67. Hadn't had a close this week. We're going to find that out in 2 days, obviously. But this 53.67 unfair high on our weekly, this is absolutely within the scanner. We crossed the border 52.71, and now we're kind of looking into that 53.67 area and breaching that. And we talked about, those were the targets up top, 53.67. We had a little bit of a pullback back into 50, but we talked about what's the risk, and in our opinion the risk is to really be short crude oil. So we've been looking for targets and then waiting to see if we can get some breakouts or come back into support areas. That support area didn't really happen, so now we've got to look at the breakout, and what Joey Jong had talked about the other day might apply here to crude oil. We get a little bit of a consolidation area, and we don't get the pullbacks into areas that we wanted to on that short-term basis. We may have to chase this. And we had also talked recently on the crude oil scene, we're going to pull up the XLE. We're going to take a look at that. But as we look at crude oil, we've talked about, where's the risk? We talk about it all the time. And with all the things we talked about over the past couple of days, the fundamental news, the supply issues, it just really has been hanging in there. And this is actually happening in the face of, and I know I don't have to tell some of you guys this, in the face of the dollar getting right back into the 100 mark and squeezing right up against these weekly unfair highs on the U.S. dollar on the weekly. So, is that pretty bullish for crude oil in general? I think so. And we talked about, there's a lot of people short this product, and this thing seems to go up on ether sometimes. I mean, people just covering. So we've got to keep that in mind, and we're going to just drill right down into the XLE just to kind of hammer the point home. That the targets up top were still 80.07. Now we've had the breach of that, and we got a weekly close. I mean, this thing could lift. And here's the situation on the XLE. We talked about putting stops below 76.19 a while back based on your appetite for risk, and just sitting tight, maybe taking some off the table around 80. What was the mark there? 80.07. And now this is kind of getting into an area where hedge funds and people who were playing the supply game and a couple other things are just going to have to rethink themselves. So as we look at these crude oil contracts and then the XLE, it's okay to be long, not okay to be short. That's basically the way you need to look at this at this stage. Now, do you want to be a hero and step in and try to pick the top here? That's up to you. But if you're going to play that game, you want to at least get back down below the 80.07 area so you can have something to lean off of as far as an inflection point. That's the way we're looking at this. Okay? And you've got a lot of relativity things going on that could easily drive this higher. If the dollar sells off at all, you may see a spike in crude oil up to the 60 area relatively quick. And this is a hole in the marketplace, so to speak, and those holes are really where price action will move relatively quick. And that's based on our historical back testing of looking at profiles and where some of these gaps are and how they're historically treated. So let's take a look at the gold situation. We had talked about 1182 the other day, just waiting patiently, and we reached a low yesterday of 1183. So and that 1182 was really rounded off to 1183, 1182.80 something, and then the low yesterday was 1183.5. So you can't ask for anything better than that. You got a nice little pop, and we've been as high today as, what is that, 1194, now 1195. So, what do we do now? So we talked about not really looking at gold as the shorting dream out there, and we talked about waiting for it to pull back to support areas. We found that 1182, 1183. That's kind of cool. And now you've got, hopefully, looking at this with stops oriented below 1182, 1183. And on the weekly, as you can see, we're just kind of turning around here, but the battle points again off those daily unfair lows. And the cool thing is we're kind of still hanging in there on the 240. So up top, you could kind of be in a target rich environment around 1200, 1202. Just pay attention to that. Let these 240s kind of regulate this trade a little bit. And if we break above 1200, we could go back into that 1215 area. Okay, let's take a look, and this is again in the face of the dollar rally. So let's take a look at silver really quick to cover some bases. Silver's kind of been the redheaded stepchild of these two things. And then we talked about there's no way to really get back into the long scene until we get back above 1660, or we have a new profile appearing on silver, and that's just not happening right now. You do have a major weekly inflection point way down here at 1559. So right now, what do you do with silver? There's just nothing to hang on to right here. There's nothing to go short. There's nothing to go long, and I'm not a big fan of getting short silver or gold in any way. Okay. All right, as we talked about the dollar, we're just going to kind of move into some inflection points on the euro really quick. And here we go. Let's just kind of get our charts right here before we get deeply into this. Okay, so yesterday we got a gift. We talked about, what do you do with this thing? You wait until we have breakouts on the downside or rallies back up into a resistance areas. Yesterday we reached a high of 107.07. Guess where that unfair low is? 107.02. Is that close enough for you? And now we're down, 130, 140 pips off of that, and that's just really case in point. And look at how we touched these areas before and touched them here. These are areas that you want to let the market come to you. And as we looked at the euro, well, thanks, John. Why didn't you tell me to get out of my short trade a little bit earlier? We had our 240s line up here, and these lows are 107.12, 107.02, and we hit like 107.06, 107.07. So you had a little bit of a DMZ there to get short. And were you supposed to get out of this trade earlier before that rally? That's always the question. That's based on your appetite for risk, trailing stops, things like that. There wasn't a lot of reason to get out of that short, and there's still on an intermediate basis, there was zero reasons to get out of that short. So, again, this is 130 up in your face and then 130 down. Depends on what type of position sizing you're doing. But again, we had not a lot of reasons to really break stride on the downside here. But trailing stops, I'm a big fan of, especially if the profiles are relatively wide. You don't want to get back to give away the farm. Where did that come from? Still trying to figure that one out. Anyway, let's take a look at the S&Ps really quick. And as we look at what's going on here, we're going to pull up our scanner plus. That Tom and Tommy are really kind of trying to work through this and figure out how we're going to launch this on the TFN network. But it's a little bit quicker. It's a lot deeper in some of the things that are in here, and absolutely has these paragraphs embedded. So we're going to take a look at the S&Ps on the Brett situation really quick. And I hope you guys are still seeing my screen. I'm going to blow this up. And, we're just kind of hanging tough, positive on both of them. But, again, I've been kind of preaching this. It's a little concerning. we absolutely had a little bit of a reversal yesterday after we sold off into those lows, which were 2075, 2076. We're about 20 S&Ps higher right now. But let's take a look at the 240s. And again, you had some leverage points to try to pick some battles around this 290 area on the short side. If you wanted to play that game, that was breached. Took me out on the short side. Here's the weekly view. These are short-term gyrations that I'm playing, and right now the long-term is looking ever and ever better, especially after that reversal yesterday. So it's going to be time to sit tight for me. You're getting literally breaching above 240 profiles now, so I'm trying to stay away from any type of even nibbling on the short side right now because of what happened yesterday. And as we look at this, and we're going to pull up our the Scanner Plus. We used to call it our C-sharp scanner. We're not overbearingly, the pack on an intermediate basis still kind of lurching forward. So I'm still a little suspect of this move. Tried a little bit of, somewhat of a trade yesterday. It didn't work out. That's okay. That's the way trading goes. And we're going to cover, get my screen straight here. We're going to cover the NASDAQ really quick. Give some numbers out for that. This has been, we talked about the rotation and this 4437 area being a little bit of a target up top and maybe resistance area. Our NASDAQ on our breadth indicator is, go down here. This has been something that's also been weighing on my mind. The NASDAQ's kind of been underperforming a little bit. Staying within profiles, breadth situation is not that positive. I think the risk still is to get long the S&Ps or the NASDAQ in any big way right now. They're pretty much lagging on a relative sense the rest of the world as far as some of the moves that are happening. Europe, Asia. I just don't think there's a lot of edge here. So, if you miss a move, you miss a move. We've had a great bull run for 6 years, and not participating in each move up is not going to be a deal killer, especially when I look at my situation. Let's take a look at the DAX. Talked about staying away from this on the short side. This is kind of cool now, what's going on here. Profile appearing below. This is extremely positive for the DAX, and the good news is you've got those weekly unfair highs at 12,243, and now you've got these dailies at 12,205. So that DMZ at 12,205 to 12,243 is going to be something that you got to pay attention to, and the orient stops, in my opinion, below that DMZ. Guys, we will be right back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hey guys, welcome back to the show. Got Michael over here, one of the best programmers in the country, just fumbling through trying to find me a pen here. I think we've got Edmundus on the phone. Eddie, do we have you?
Yes, you have me, John. Good morning, everybody.
Great. Hey, what's going on with this crude oil? Are we gonna head higher now?
John, don't ask me what's going on with crude oil. You're rubbing my wounds, you know.
I'm not rubbing.
Yeah, I got a little clip on this, you know. But I know what it is when you get out, you know. So the price closed above daily profile highs, and I'm just entirely hedged, delta neutralized it, and I'm sitting there and watching. Okay. I'm not a big fan of going long, which is technical part says that we should be going long, nowhere else but a long or flat. You know, but fundamental part says, hey, sell it out because of the inventory is sky high, you know, all-time high ever since been. So it's probably some political games here. Also, Arabs and Saudis try to push this thing with the Yemen, and you know, and then hedge it up real quick, capitalize on it. They'll sell this stuff in the future contracts. But anyhow, that's what we got, and that's what the oil is. And I got that yesterday. As you can see, yesterday price closed above the box, above the unfair highs, the profile supply. Now it became demand. Now I'm neutralizing everything what I can to the delta neutral, and sitting and watching here what's going to happen with this thing.
Well, you know, there's, like I said before, there's just so many weird things that are not really making sense, as, you know, for this thing to head south again right now. It just anything could scare this thing up to 60 in a heartbeat. So that's, you know, we talked about that, and I know you were kind of starting to hedge things in what we do pretty, like you said, delta neutral, just to not suffer any upside spikes in this. I know you were trying to trade the range and try to maybe have this thing come back down into the 48, 49 area, but maybe a while before it does that. There's no need to suffer through that. It's a great lesson, folks. We can't always agree on things, and you got to put stops in. You got to know when to kind of say uncle on some of these situations. And the good news is Eddie saw these things breaching profile unfair highs on the daily, the weekly now, and that's where it's kind of no land to be short. So again, looking at this daily, I've got it up right now, 52.71. That was the first, hey, we're playing with fire here. So that's kind of where some of the logic came from there. Eddie, what else is on your mind? Are you looking at anything else that anybody else out there would maybe? I would be
repeating myself what you just said in the early part of your show, but I would like to pay attention again, return your interest to the euro. And I got to tell you chronology, if you don't mind. I tell you chronology how I arrived to this trade, because I'm watching a couple more than attention, human, normal, typical attention allows me to watch. Therefore, I'm using the scanner. Using the scanner, I was watching scanner currencies were on my scanner, among others, and they had an alert system. I say, hey, give me an alert when price gets into the bottom of the profile. And I was looking the scanner, flashing the scanner. And all of a sudden, yesterday I had this flashing sign that the daily profile on the euro-dollar rate, it was flashing, boom, boom, boom. You see that in the sort of, yes, one is flashing, I think, right now in the two below, John, two below.
Right. The British pound.
Yeah, that's how it is. That's beige color. What color is that?
These are, let me pull this up. Let's pull it. Look, okay, so we've got two bottoms being hit on the British pound right now, USD. So let's go into the British pound USD really quick.
Exactly. Yeah, rose color for the users. So I saw the flashing rose color on the euro dollar. I say, wow, on daily they're hitting the highs, they're hitting the lows of the box. Price was below the box. And that's how I caught it. And I loaded up of this baby, yesterday. Right at the top of the trade. Everybody been scared. We took the risk, calculated risk, low risk, high probability. Why low risk? Not because the market couldn't go higher. It couldn't go higher. Of course it couldn't hit. But low risk because the stops from that area was very, very close. So I need to kind of have a very close, not much of the move up to get me out or neutralize the delta out of the trade. Now it's a perfect, follow-through trade, developing well. Hopefully we're going to go down, and that way over surpassed my losses as a portfolio losses on the oil, shooting on the oil.
Gotcha.
So that probably would be, the 2 cents of how to use our tools and why they're so good. Because they just got me into the perfect trade, maybe trade of the year,
Awesome. Well, I tell you what, I hear the music. You probably do too. Can you hang around for a little bit longer?
Sure, John.
Awesome. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Eddie, you still with us?
Johnny, I'm here. Listen to the commercial.
Great. It's cool that, you know, we're just looking at a very finite little set of currencies here. And this is, I just want to review what you did yesterday and how you caught that really nice move in the euro when you got alerted to it coming off the scanner on your screen. Similar situation with the pound right now. We've got bottom. Okay, so what does that mean? And you can do filters for this. You can come in here to this. You can go, okay, I want to see bottom on the weekly, and I want to see bottom on the daily. And there you go, British pound. All right, now you can filter over 2,000 instruments like this, but let's just kind of reset the sorting. We're looking at our currencies only right now. And Eddie, we've got this bottom 147.27 rounded off and 147.74 rounded off. All right, so that means that the current price, just for everybody out there before we start talking about this, Eddie, that the current price is sitting right around within a 10% volatility range of the height of the box or the height of the profile within the bottom part of that profile, which we call the unfair low. All right, so price actions around here, you see it's kind of breaching this back and forth. It's turning red, gray, red, gray. Okay, so I'm going to go to our charts. This is our weekly situation. Kind of poked our head above weekly unfair lows, and that was given in the scanner, 147.27. And as we look at, we're kind of at the top of that little DMZ, if you will. We've had a profile up here above price action, Eddie, which I know you're a big fan of. That's a relatively bearish sign. So, you know, I haven't gone through the dollar with you today, but what do you do here? Is this a possible wait and see to see if we kind of start crossing the border altogether up top? Or do we wait until we get back down below these weekly unfair lows and just kind of consider that the pound is just doing a little bit of a dead cat bounce for a while off recent all-time lows here? What's your thoughts on the pound?
This is, John, a chronology, exactly what you just mentioned, chronology of the research. First of all, you find some candidates on Scanner. Scanner would suggest you to look at the candidates, and then then you take a look at the chart itself and do real quick research, which in 3 seconds you can find out what it qualifies. The question is what it qualifies for. Question is qualifies for the short at this moment, and watch out if you're on the wrong side. Why for the short? Price has been below the respective profiles. It has been below. Now it comes from below, from the bottom into the top to test resistance. And that's how it works. You check you see the technical alerts, what that is, and you see if the price was coming from inside of the box, from it descending into the top, into the bottom of the box, then we would consider like the possible long. But meantime, price closed below the profile, breached the supply area. Supply area became demand area. I mean, demand area became supplied area, vice versa. Right. Now it should act as a resistance. Therefore, for those people who want to be long on pound is actually good fundamentally to be a stronger currency than that there is now in valuations towards the dollar. But because of the upcoming elections, that we have this little geopolitical reservation on the pound going higher. But if we would like to be long, we need to be we need to have a confirmation that the market players, because that's what it is. The profiles are respective mirror of the market participants, where the market players, big boys, valuating the price. So I cannot be long here, pound. I need at least the close inside of profile.
Yeah, I can't either. I have the same sentiments. I just think, it's hard for people to not look at things on sale sometimes, as if they were on sale. And the British pound, it's like the trends in force. We don't really have a lot of outside information that's causing us to think otherwise, and no technical information for that matter. And what Eddie's saying is you got to keep turning the wrench the same way. We're kind of coming up into this DMZ. If we're going to try to do some long type movements in this, we want to get a kind of a close up in the profile itself on the weekly or the daily. And this is just kind of the first hint of just testing the water, so to speak. And I'm actually a big fan of shorting this and just put the stops above 148 based on my appetite for risk and just seeing how this thing works again. I mean, a lot of people look at this. I'm just going to pull up our weekly, and that's just that's.
Yeah, John, I agree. On weekly, it's no brainer here just to short. But I'm looking to buy this thing. This pair. I'm looking to be a buyer of this pair.
You got to have some confirmation though to look at.
Correct.
To enact that situation. Okay.
And our profiles, give you a clear picture where the market players are, how they evaluate this market. Because our profiles, our algorithm is calculating the activity of the biggest market players. So therefore, we know where they they're evaluating the market. Only thing is left to do just to compare a current price with the calculations of the market recent market participants on this thing. So it's very, very simple. There is two opinions. You would like to short this thing. I have already opinionated. I have, I'm sold that this currency has to be fundamentally higher. Therefore, you're shorting, you're playing a short game. I am, on the other hand, avoiding the going long because I know it's not my time yet to go long. So it's not necessary that I have to be winning, but I will not lose being on the right side of the market,
Gotcha. I've got U.S. Bancorp up right now. This is a stock that's got some earnings before the market here. I think they're out. Obviously not the rosiest situation in the world. Let's just take a look at it. There's been some questions about this. 43.89. We're trading pre-market about 42 and some change, 43.20, somewhere in there. Not a terribly overreactive situation here, but again, this has been one of those XLF type financial related stocks. Just want to throw this out there to you guys. 43.89 is going to be stops above on this one still, and I want to go right into the XLF. This is last time Eddie and I talked. Actually, we were both just relatively bearish on this. It's kind of poked its head above daily unfair lows, which has been a little bit disturbing, but we kind of coupled that with these weekly unfair highs, which are around 24.47. So we talked about the dig-in area was 24.25 and into 24.27 on the short side. I actually like that it's kind of languishing around while the S&Ps are kind of drifting higher. Still makes me a believer in this short, but again, you got to be able to say uncle above this 24.50 area on the XLF. And that's your pick, Eddie. If it goes bad, it's your pick. If it goes good, it's my pick. I just always want to,
It should be followed through on this thing today.
Gotcha. Well, you mean on what? On the broad market or on the
on the broad
XLFs?
market? No, on XLF.
Okay.
On XLF.
I think so.
Not today.
Yeah, I mean,
not today. This week, next week. I'm sorry, because you showed the first weekly chart,
Right.
and weekly chart is going again back below the profiles. Try to get a new profile. Showed us a yellow possible box. Box did not appear. Market dived again. Continues the downside action. So the live profile still offers the same resistances, or former demand area now becomes supply.
Gotcha. Well, I still think it's, I think you will too. It's a relatively low risk trade. I mean, all things considered, and that's kind of, me and you.
John, let me tell you how I play those trades, which are a little bit, maybe
Please.
too volatile. I use, if it's possible, I use a option plays. That means if I'm wrong, in instance, if I would like to short it, I would buy puts. I would buy puts with a delta of 50%. What that delta of 50% means? That means when stock moves 1 point, the option responds 50 cents. That means delta 50%. Typically, delta 50% is at the monies. So you go 3 months ahead, not to be subjected of the TNV, time and volatility, 3 months ahead, 3 months forward to find some, say, right now we have April, so we have like June, July type of option. This is going to be expensive, but still, and you make sure that there is liquidity there, that you don't have problems with getting out. And then with the delta 50%, I'm entering the trade. Why I'm entering the trade 50%? Because per option, if I'm wrong, I don't have to get out, or market can show me the way. It can close inside of the box if I'm short, and then needs to at least stay 2-3 days there. I will not lose lots of money. When it goes down more, and then if it goes your way, your delta will increase because price will come deeper in the money, and delta will become 50, 60, 70, and 80%. That means when you make more, and more percentage-wise. And if you start losing, you lose less, and less, because price will be getting farther from your chart. And when the market goes your way, shows the direction, then you can start adding to the trade. That's how I personally trade. So
Got it.
that's my approach. Yeah.
Got it. Okay. Thanks for that insight. I mean, a lot, Eddie's, talking about these option, amalgamations, if you will. And, what we found out over the years, it allows us to, kind of hang in there with some concepts and really chip away. If the trade goes our way, it allows you to do so many cool things to lock in some profits. A lot of times complicating a trade in a profitable trade is not the best thing in the world to do. But we love those risk reward scenarios where you're kind of a lot of times finding an option hedge to where that you're risking a couple of points here or there and have an unlimited upside. And I like, Eddie and I like to not just buy the lottery tickets, buy the puts and calls. It's kind of to mix in the future or some underlying instrument, ETF or whatever, with, an option, and not make it a complicated, just some people turn butterflies into pterodactyls, if you know what I mean. So here's the.
John, I'm sorry. I just remember I just gonna tell war story. One of our trading. Do you remember we were legging in? I forgot what we were creating. About 6 legs option spread, and since it was very low risk, it need to be like large size. Remember when we started legging in, they executed that means the broker dealer. I'm not gonna tell the name. 15,500 lots on the minis. Remember? And then they freaked out. Somebody, some red flags flashed out, and they stopped executing other legs. And we say, hey guys, you cannot hang, leave us hanging with the 3,000 lots of options just in the middle of the spread. You remember we got like 6 hours or 7 hours, and
thanks for ruining my day. Appreciate that.
Yeah, and it was terrible. These guys just, in order to preserve their risk, they got us out of the most risky positions we legged in, and I think they let us finish our position, and think it was very profitable trade, if I remember correctly.
Yeah.
But that's going into the. Go ahead.
A lot of these smaller clearing firms, some of them don't understand, the defined risk situations on the options. And I know if you guys have been trading at certain broker dealers, not to name any, but they get a little wigged out when they see a lot of option plays on, mixed in with futures, and they don't understand. So it's somewhat of an education process at the beginning. If you put on a lot of weight, like Eddie was talking about, some of them they're just seeing you're short a couple of thousand S&Ps, and they don't understand what the hedge is about or the downside risk, believe it or not, until they get their span sheets from the CME as a clearing firm. So we're looking at Apple right now. Unfair highs at 128.58. We hit those yesterday to the tick. Came off. I'm not a big fan of going short Apple. That was kind of a target-rich environment there. We had talked about maybe that was going to be something to pay attention to. That happened. Eddie, I know we're not trading a lot of stocks in general, but I'm going to kind of pull up Bank of America. This is something that's got earnings out this morning. It's a relatively cheap stock. We kind of have talked about it recently as something that just wasn't seemingly getting off the floor here. The action today, pre-market, we're trading 1577, I believe. So we're sitting down below these daily unfair highs. I know I haven't showed you this in a 30,000 foot view yet, but this is something I've been talking about. This stock looks like something's wrong with it. The yield curve, the flattening of the yield curve is not helping any of these financials. Now they're coming out and saying that, that wasn't apparent before. We're going to take a last break here. If you can hang out, I want to get into something else when you come back. But, this is something we had some emails about this morning. So big fan of not going long Bank of America right now. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Eddie, you still with us?
I'm here, John, hanging, just dying to say something, more important and to leap for the stars, how you say, right?
Got it. Here's PNC. This is something you can talk about. Financial services. Got a little bit of a number this morning. We're looking at 92.70 now. So the stock has, this earnings situation, very similar, XLF-ish, if you will. This 93, 94, let's call it 94 area. Now we're trading down the 92 and some change area. This is exactly what you want to see. Could help the XLF move down. Some of these banking stocks are obviously going to take it on the chin. This yield curve environment is not very conducive for them to make more money, even considering that they seemingly rip everybody. I look at my bank statements, Eddie. I don't know. What is it like in Spain? Do you look at your bank statement?
No, I don't.
I know you don't, but
I don't have bank statements. I have a fishing, rod and pole, and I go to get my fresh dorada right there. I just buy salt, man. No, they produce the salt as well over here. And my wife bought it yesterday. How you call it? A bread baker machine. So I don't need to go to buy bread anymore.
That's awesome. Well, get back to the bank statement issue. Every time I look at, I know you guys are the same way. If you don't call these people out, they will just keep raping and pillaging. It's unbelievable. I caught $1,000. You remember when I caught a $1,100 error on our corporate account that one time? Just fees, just we're charging for this, charging for talking to a teller. I mean, it's insane. It's criminal. It's unbelievable.
To that respect, I came to deposit money in a Caixa bank right there, just to deposit, give them money. They charged me €5 to deposit the money. I say, hey, guys, you're a little nuts here. to withdraw, probably, but to deposit, it's kind of interesting.
Let's take a look before we go to end the show here. And by the way, I'm going to be filling in for Steve Rhodes, the Trader's Edge, next hour. So hang around. We're going to be looking at some things on the scanner, which I think are going to be relatively interesting. Soybeans, we talked about trying to leverage. This is November beans. I'm not a big fan of this thing rallying too hard here. So a little bit too much, rich for my blood as far as going up. So just waiting patiently to get back down below 942.5 now, out of the market. Don't believe in being short in a big way when we get back into the fair auction. Eddie, I'm sure, doesn't either. So this is something I think that's going to eventually do a pretty good flush here. But now's the right, we could rally back up into 973 easily. So just pay attention to that. Eddie, to close the show, we got about a minute left. I want to look at the 30-year. This thing was kind of roaring pretty strong yesterday. Let's take a look at the daily situation. We're still within the weekly profile. So now we kind of got above. We didn't close above. We came back in. How are you looking at the rate environment here with the S&Ps being where they're at?
I read the news yesterday that Bank of America, they increased their revenues just because of the volatility, trading results on volatility in fixed income market. So volatility probably will continue. It's just picking up. But technically, we are in profile, as you can see on daily. Breakout outside of profile. I'm definitely looking to play this long side. And bottom of the profile area of demand been protected well on the downside. Upside break. I don't know. What's the number, John, on a upside?
165. We got to head
165. Above 165, this is a buy. Very low is buy.
I totally believe you there. Eddie, thanks for staying on. Great insight. Love to talk to you. Guys, you've been great. And hang around. We're going to get the Trader's Edge going relatively shortly here. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.